Print Off the Cuff, presented by IIFL Wealth and Asset Management, powered by K. Raheja Corp, corporate partner AU Small Finance Bank, in association with Global Insurance Brokers, airline partner SpiceJet, in association with Jindal Steel and Power.
Welcome to this edition of Off the Cuff. And when you have Raghuram Rajan on Off the Cuff, you don't waste time with introductions. All of you know him. And we have to leave all the time possible to him. So I will speak as little as possible, Raghu. I'm so happy to have you on Off the Cuff. It's your first Off the Cuff. I think we've had several walk the talk conversations. I think a couple in really freezing Davos and one in IIT, your alma mater, IIT Delhi. But this is our first Off the Cuff. So thank you very much. And you look quite all right for all the crisis of the COVID situation in America.
Well, I think the lack of travel does wonders for your health, right? It makes you sort of focused on just healthy eating and healthy living. It's unfortunate that many of us have rediscovered health when the rest of the world is not doing so well.
Yeah, I mean, that's important. But, it's also, I was just going over some old papers. What do you do at home now? You clean up your drawers and this and that. And I found some old boarding passes and I felt so nostalgic, just a touch of a boarding pass. We seem to be forgetting it now.
Absolutely. I mean, there are some flights I understand in East Asia, which are just round trip back to the place you started, just to give people a sense of the airline food. I mean, there are some things we miss, which seem extraordinary.
As long as we don't end up like Mr. Clooney, getting so sick of not flying that we spend the rest of our lives flying. But much else has changed in the world. And the biggest change is in your domain, which is economies. Nations' economies, communities' economies, world economy, trade. So give me a Raghu's eye view of this world, say about 7 months or 8 months into COVID.
Well, it's not over yet, right? So what we see in Europe and the United States is cases are growing once again. East Asia has been much more successful in containing the virus. But, of course, India, we're still battling it. South America is still a battle. The difference between industrial countries and emerging markets is one of spending capacity. What has happened in industrial countries is thus far they've managed to protect their households and workers. Of course, the longer this lasts, the harder they find it. In the United States, you see there's a discussion about a second stimulus package, which seems to be breaking down for political reasons. But, the virus is still with us and therefore demand is still low. Firms are still being, hit by the lack of demand. Many firms are closing. So the kind of distress on the household side, on the firm side, that we are going to see has still not come out in full. So you don't be misled by the levels of the stock market. There is a lot of problem to deal with. And I think in India, certainly, because of the limited spending that we've done in protecting households as well as in protecting small and medium firms, there is a lot of distress that we will have to deal with going forward. There are concerns that we have actually gotten more impoverished as a result of this crisis. I mean, this is hopefully a once in a lifetime event, but it is a huge event and we should not minimize the effect.
So how do you define, just explain what you mean by maybe we got more impoverished?
Well, think about it this way. And I think even economists sometimes get confused about the terminology. What we've had is a virus which has hit people's livelihoods. People can't go out to work in the restaurant, in the hotel, as a tour guide, etc., because that business has completely collapsed. So we've seen a revival of manufacturing in India. We've seen pent-up demand. The rich households wanted to buy cars. Now, because it's sort of more difficult traveling in the bus, some of them will buy cars, second-hand cars, etc. So you see demand coming back for manufactured goods. But over time, this stabilizes because you've got a significant portion of the population which still doesn't have good jobs. Their jobs haven't come back, and so their demand is not going to be expressed. So on the one hand, demand is weak, but demand being weak also then compromises the firms that were supplying that demand. They're not seeing any revenues, they're seeing costs, they're seeing debt pile up, and many of them decide, well, better close. Well, if they close, then the jobs are gone, but also the supply side becomes more constricted. And so what you have is this battle between demand and supply, both of them settling at a much lower level. And that means the growth potential of the economy is much more subdued. But many households which used to have jobs, which had climbed up the ladder of out of poverty into the lower middle class, or somebody was a waiter in Taj, somebody was a cook in a restaurant. Those jobs are gone. And these people now have no livelihoods and are slipping back into poverty. So their kids now go out and, are back at the waste dump looking for, anything they can find that they can sell to the Radiwala.
And you think this could be happening at a large enough level, at a mass level? Or is this anecdotal?
Unless India is different from what is happening in South America, what is happening even in the United States, this has to be happening. Now, obviously, we don't have data. We need to get better data on what is going on. During a few months ago, we had some anecdotal survey, we had some survey data suggesting people were skipping meals. The point, however, is that it would be hard to say that relief efforts in India have been on par with relief efforts in the rest of the world. If the rest of the world is already suffering significantly, India must be suffering.
Yeah. So we'll come back to growth, but let's look at these stimulus packages. Look at America, Europe, and India. So what happened to the first stimulus packages in each one of these three?
Well, I think a couple of numbers are useful to look at. In industrial countries, you had, IMF estimates about 9% of GDP in fiscal stimulus and about 11% of GDP in credit stimulus, easy loans, etc. Around 20% of GDP, therefore. In the US, it went much further. It's probably 10, 12, 14% of GDP in fiscal stimulus plus enormous credit stimulus from the Federal Reserve. The point, however, is it has been huge in those countries. In most emerging markets, it's been much lower, except Brazil. India, the IMF now estimates, taking everything into account, including recent measures, about 2% of GDP in fiscal, and about 4 to 5 in credit measures. Okay. Now that's, if you total it all up, it's about, 7% compared to 20%. But, you must remember, we're not the same economy, that we have far poorer households. We have small and medium enterprises with far less access to credit. And of course, we've had a pretty severe COVID sort of outbreak, the second largest in the world so far. Maybe we're approaching, that unfortunate first place. But I really think that the damage that is done here because of the thinner buffers can be even more significant than in industrial countries. And therefore, the lack of support tells more in terms of the underlying health of the economy. Now, can we do anything about it? We can talk about that, but it is a tough situation, a very tough situation.
Which of these three do you think has had the best returns for its stimulus? America, Europe, and Britain, or India?
The stimulus has been tackling different problems. Okay. And as a result, it has to be weighed in that way. Europe was trying to tackle a short-term problem and basically kept trying to freeze the economy as it was, keep people in their jobs, don't let them get unemployed, etc. Now it's finding that it's not a short-term problem. You can't sort of open up suddenly, COVID reappears in a big way. And therefore, now they're going back into a second lockdown. And as a result, what they're seeing is that the support they gave extremely expensive, will need to be continued for a much longer time. But they have the resources. They're fairly rich. They also have automatic sort of processes by which they can get the money. For example, in Germany, they have these short work programs by which workers are held on. So they have enough to the virus if it ends by about mid next year. Beyond that, of course, all bets are off. In the US, it was much more short term, very, very focused on the short term, but not about keeping things in place. It was sort of support to the families, support to the businesses. Now, because of the political fighting between the Democrats and Republicans, that support is going to end. What the US did was essentially allowed more restructuring, reorganization in the economy, which has been good because there will have to be some element of reorganization. But it's also ended the support. It was huge support initially, but that support has ended. So unless they redo something else, there are going to be consequences in the next few months as economic activity slows considerably. In India, I would say that the focus has been much more on, basic food support and so on, less on the other stuff. And I think the damage done to small and medium enterprises, which are already in a bad way before the crisis. Remember, we had already insisted on forbearance, not recognizing the loan losses, etc., to them before the pandemic hit. And of course, things have gotten worse with the pandemic. So jobs, livelihoods, etc., are going to be more impaired. Again, I think we could do more in relief to the households, and we could target MSMEs a little more with support. For example, the MSMEs that have been tax paying, try and give them some relief so that they, can survive, maybe via some tax transfers back to them. But I think we have to be much more clever about the use of our, resources, because we have more significant constraints, partly because we were already running a large fiscal deficit before the pandemic. We already had high levels of debt. We started the pandemic in a bad situation.
And our growth rates were declining already, sort of.
Absolutely. Absolutely. So, right. There will be a temptation to say all our problems are because of the pandemic. No, we've had problems for, long before that.
So this Government of India said it's 20 lakh crore stimulus. How do you see it?
Well, I think we have to be careful about the numbers. And, sometimes the numbers are meant just to, give people a sense of comfort rather than reflect reality. Most economists, when they saw that 20 lakh crore number, basically said only a fraction of this is actually fiscal support. There was this, around 3 lakh crores targeted at the MSMEs in terms of credit support. But as I understand it, that credit support has typically gone to the better functioning MSMEs rather than the ones that were in desperate need for credit. So we have to, in all these things, announcements, there's a gap between announcements and delivery, and then delivery, we need to see whether it met the purposes of what was needed. I would still say that on the relief side, especially direct relief to the poorer households, we have to figure out, is it reaching in adequate measure, or do we need to do more? Because a lot of that was predicated on a 3-month kind of window. And now this looks like lasting more, especially in certain sectors, in certain jobs, where it's unlikely we'll get activity back to that level for quite some time.
I have a question from my colleague, YP Rajesh, who's our managing editor. He says, what was the inflection point? What was the turning point that broke the momentum of India's economy? When did the slowdown start and it became so deep-rooted? Was it with demonetization or something else?
Well, one way of thinking about it is that, we really haven't had a serious set of reforms. We've had sporadic reforms and some things that you could count as reforms, but a serious set of growth enhancing. I'm not talking about redistribution. I'm talking about growth enhancing reforms since the NDA won, since 2004. We had the UPA, which was paralyzed by some amount of infighting, but some amount of opposition, displeasure in UPA 2. No significant sort of growth-enhancing reforms then. There were reforms to redistribute better. Manrega came in, for example, in UPA 1. So there have been redistribution, but not growth. Even this government, over the 6 years, it's been a lot more about redistribution, but fairly little on creating a much stronger environment for growth. And, you can tout some measures, or GST, not greatly rolled out, but the bankruptcy code, the inflation targeting framework, these are all positive steps. But the question is, has it come together to give private industry an incentive to invest? And the answer is it hasn't. I mean, you look at investment, it has been really, really weak, even before COVID. And of course, after COVID, because of the disruption, it can be weaker. So one argument is we really haven't done significant growth enhancing reforms. The government announced some measures just now, we can come to that. But really over the last so many years we have. Second is, yes, it was, trudging along, but it was getting back after the global financial crisis. And then the jhatka of demonetization, a badly rolled out GST, and the third jhatka was COVID's lockdown, which without relief. Lockdown may have been sensible given the circumstances, but without relief, which caused the migrants to start leaving, caused the sort of damage to the economy. You could argue these three have actually increased the body blow to the Indian economy.
Yeah, there's a tendency to be the daring paratrooper who jumps without checking the parachute.
Well, I mean, so why have we not prepared enough? And that's a deep question. And I would argue that sometimes what happens is the leadership gets frustrated that nothing is moving. So here's another jhatka to see how we can move it forward. But you need to prepare the jhatka. You need to prepare to make sure it works as advertised. You need to take counsel. And to some extent, if you don't, you can do more damage than good.
Was demonetization a jhatka without preparing?
It was. And I would argue that everything we know about it says it was ill-advised.
Yeah. But was there preparation or there was no preparation thereof? Was there checking of the parachute?
In hindsight, well, I think even with foresight, you should have had enough cash in the ATMs, in the tijoris of the SBI, as well as the banks, to pay out when people wanted the money. In fact, the money was not printed. We had printed some, but not enough. And the expectation was it would take place, with enough preparation, if it had to be done, and that was entirely a political decision.
Well, if you ask me, the political instinct was that maybe anything between 5 lakh to 8 lakh crores will not come back, that people will destroy that currency. And so you won't have to print that much. In fact, there's been a very interesting statement from Rupendra Mishra, who was then Principal Secretary to Prime Minister, saying that the 2,000 rupee note came as a compulsion, although the Prime Minister was reluctant because there was a shortage of currency notes. So,
well, I can attest to that. The idea was to print everything before it was done, if there was a political decision to do it. And the only way it could be done in reasonable time, and I won't tell you what that reasonable time was, but it was certainly longer than what happened, was to print large currency notes, that you couldn't do it with small currency notes. But we can always look back on decisions and see whether they were good ones or not.
So whatever broke the momentum, do you now agree? Do you think that IMF is now underestimating, overestimating, correctly estimating what will happen to India's economy this year? That is 10.5% decline.
The truth is, nobody knows. I certainly won't pretend I know what the true state of damage is. And remember, there are two things. This is not the usual recession where, the firms see lower demand. If all that happened was firms saw 10% lower demand, they would still be surviving. They would shrink their business. They would be surviving. But this is very asymmetric. Some firms, the auto manufacturers, are seeing demand come back. They're ramping up. They're big firms. They can last. The restaurant, the hotel, the service sector enterprise, maybe the car repair, this thing, they've shut shop because they couldn't last out. They've let their workers go. Their workers may have gone back to the village. So the potential growth of the economy has also been hurt. It's not just the actual growth this year, it's ability to grow. So most people are saying V-shaped recovery. You go down and then you come back. Well, that relies on the economy not being damaged. If it is damaged, it takes much longer to come back simply because, even if there's demand, there's not enough supply. In fact, some people are looking at the inflation numbers and saying, is this also a reflection that the supply is damaged? And so this is something we need to be very conscious about, because unlike the industrial countries who have offered a lot of relief to the small and medium enterprises, a huge amount of lending, a huge amount of support, we haven't been able to do that. And given that they were already damaged, it means that perhaps the damage is greater. So I would not worry just about this year's growth. I mean, whatever the number, 10% that the IMF is suggesting is already terrible, 10% negative. But, even if we go a little lower, what we should be worried about is the longer term damage to our growth trajectory. And that is why we should be prepared as we come back to refloat the economy, to have credit going to the entities that need it, to help a lot of new enterprises start up so that they can replace the enterprises that have gone out of business. That should be what we should be preparing for now. How do we get that credit going? And that means cleaning up the mess that is in the corporate sector, in the financial sector, as quickly as we can.
I mean, this is a very unusual kind of crisis. Just to tell you a personal story, I've had a filling come off in one of my molars on the day in the week that the lockdown began. And I haven't had the courage to go back to the dentist, or the dentists have opened their clinics, but I think I can manage without it and eat from one side of my mouth. So I think a lot of people are postponing a lot of things right now.
Absolutely. And, in some cases, it means there's pent-up demand. So when you feel confident about the dentist, you'll find it hard to get an appointment because everybody else feels confident at that point. And they will make up some of this. Some of it will be gone. But some of it also means long-term, right? So if you have heart problems and you don't get it attended to, it is quite possible that you have a much more severe problem down the line, simply because you've been postponing quote-unquote maintenance over this period.
So I'll go back to my political editor, DK Singh, who asks you a politically loaded question that after the IMF projection, there's been a flutter that this year Bangladesh's per capita GDP will exceed India's. What does that mean?
Well, Bangladesh is a country that has benefited from some openness from the West because it was considered a relatively poor country. And that should be a wake-up call for us, right? Because Bangladesh was always, quote-unquote, the basket case, undeservedly. But it was a poor, whenever you wanted to think of bad things in South Asia, you pointed to Bangladesh. But it's been a miracle, which has grown faster than Pakistan, faster than India, over the last few years. But that should also be a wake-up call, because we always keep pointing to, other factors which cause us to slow down. Ye hua, wo hua, something else affected us. The reality is Bangladesh has suffered from the same kinds of factors, or benefited from the same kind of factors. And it's, exploited this time to grow faster, to take supply chains from China, for example. People are saying we go to Bangladesh, we go to Vietnam, far less talk about going to India. So the question we have to ask ourselves is, what are we doing wrong? And I think this kind of iconic, remember in the 90s, it was China is progressing so much. Why aren't we? And that created a little bit of a spur for reforms. I think it's very important to ask ourselves, why has Bangladesh done so well? while we have been stuck. What is it that's wrong with our leadership and our policies that we're not doing well? If we ask those questions stridently, and it's very hard to evade and to give obfuscating answers, which we've had a lot of over the last few years.
So you tell us, Dr. Rajan, your diagnosis. What has India done wrong?
Well, obviously, I think we should have extended that period of reforms, because we started coasting. We saw 8-9% growth, and it was too easy, and we got entangled in political sort of infighting, when in fact we should have extended those reforms to improve growth. Something that, China, which has no political infighting, I don't think that's the greatest political system in the world, but certainly
you only fight with the rest of the world.
Yeah, but nevertheless, that they have continued the reforms constantly until, and I would say China is also dialing back in many ways since this administration, but it has been quite effective before that in propelling growth, and even this administration in its recovery from COVID has been quite effective. I would think that we need to look at our attitude towards reforms, but we need a coherent strategy, right? And the point is that we had a implicit consensus that we would continue opening up. We would essentially be integrated with the world, and that would help us grow very fast. And of course, that would give us the resources to deal with many internal issues, etc. So growth would paper over many problems. But if it didn't, we could improve redistribution significantly. What we did was we had strong growth created. We redistributed some of that quite effectively. I would say that we had some good systems for redistribution. But I think we've, in a sense, taken our eye off the growth ball. And in order to do that, your reforms can't be sporadic. They have to be continuous, based on consensus, so that the reform doesn't become a reason to agitate. And I think we need to look back and say, why did we stop and how do we start again? And at this point, given where we are, our only sensible strategy is to continue opening up and rely on a strong export-led push at this point, given that domestic demand is going to be weak for the foreseeable future. Rely on that to take us out. And there are success stories. I just read about Royal Enfield, which has now increased the value of that brand significantly and is selling Enfield motorcycles in the United States. I mean, that seems to me a wonderful sort of success story to talk about how they've branded themselves, but also made improvements in the quality of the motorcycle so that it appeals to aficionados around the world. So, India can do it. India can be a part of the AI revolution. India can be a part of long-range services. Now that we know how to do it on Zoom, now that we can do interviews on Zoom, we can teach on Zoom, and we can do so much more. But what we need to do is, again, remove the barriers. A lot of what holds India back is, impediments that we deliberately put on ourselves. This was a story in 1991. It is a story still. And unless we focus on these and remove them, and not the cosmetics, it's very easy to say, oh, we're improving these rankings, we're doing this. But you talk to people on the ground, they say, nothing has changed. So you need to focus steadily on it. And I have no doubt we can catch up. I think it's really important for every reason, including our own national security, that we get the economy back and strong as soon as possible.
Two big things that have been done now: labor and agriculture reforms. These new changes. One, what do you think of that? But before that also, you talked about removing barriers, but doesn't it look like we are actually installing more barriers now? As we talk today, we banned the import of air conditioners.
Yeah. No, look, this is why I said initially we need a consistent reform framework. We say we want to export to the rest of the world. Well, you can only export if you're also allowed to import, especially when you look at inputs, but also from a political economy, if you don't erect barriers to other people's goods, they're not going to be happy taking in your importing from you if you are banning their exports to you. So you have to be a little careful not to be, seen as overly protectionist. One of the problems with raising tariffs is it's completely arbitrary. You raise tariffs here, you raise tariffs there. Who's going to invest if they know that a few months down the line, somebody petitions and gets the tariff raised, your business is no longer sort of viable? So I think we had achieved a certain amount of clarity and consensus on this. We've gone the other way. And, all this talk about Make in India, Atmanirbhar India, I do hope it is not focused on protectionism. If it is focused on increasing India's production for the rest of the world, then you absolutely have to ensure you don't do these other things, because it destroys the environment in which India can be progressive on this. I'm sorry, I missed the first part of your question.
First part was these two big changes on agricultural and labor reforms. So new bills, what's your view on?
The intent, I think, is the right one. I am not an expert in the details. One of my, I do worry that the complaint from the agricultural side that rather than increasing competition, if some of these mandis close down, there may not be an avenue for small farmers to sell, etc. I do understand there are lots of vested interests in agriculture. The middleman, the artiya is an important element there. But I also do understand that existing structures often have a role. And so really, how do you build upon it? Is the only way to destroy them, or can you build upon this and increase the number of players who compete with each other? So, not being an expert, I have to rely on other experts here. I do think we need to see, as these laws, the effects play out, what the consequences are, and take remedial action. We can't treat reforms as fire and forget. Because what happens then is it goes in the wrong direction, the unintended direction, and it doesn't work out as you thought it would. If the critics of the law have some merit, you will see very soon some of the consequences, and then it makes sense to make changes, to course correct. Ideally, you should have had consensus before. I think it's important to build consensus for reforms. If we talk for 20 years, what's another month or two to talk? But I presume the government wanted to show some signs of movement in order to improve animal spirits. On the industrial, on labor reforms, I mean, this has again been on the cards for a long time. I think it moves in the right direction. Again, one has to see if existing labor is reasonably protected. It doesn't, if you leave labor unprotected, you basically get industrial strife. So with the added flexibility, you need to have protections also. How do you achieve that right mix? I can't tell right now looking at the law, but as we see it roll out, we should see that. And of course, we need to be bolder. We've increased the flexibility from 100-person firm to a 300-person firm, but many firms are 5,000, 10,000 people. Can we at some point see, okay, this is working reasonably, let's just do away. Maybe that's embedded in the law. I think there's some flexibility, but I do think building consensus is important.
The government can change a lot of things by notification now. It's given itself the power under the new law.
Yeah, and there I would say decentralizing it to the state governments is an important factor, because different states have different compulsions, different industries, and therefore they can learn from each other as they operate these things and see what works, what doesn't work.
I have a question from Himanshu Reddy, one of our guests, who wants to know, with the job market in mind, which industries or sectors are more stable and less stable for the next 5 years, domestic and global?
That's a hugely difficult question to answer. I mean, certainly, if you look at the impulses from the COVID, tech certainly will benefit. That goes without saying. But also, if you look at services, the distant services may have more scope. For example, from India, servicing certain kinds of activities. Telemedicine, for example, took off in the United States in the first few months of the COVID crisis. And then there's the question if you can do telemedicine from downtown Chicago to Hyde Park in Chicago, which is a suburb, why can't you do it from India to Chicago? And so there are lots of new opportunities that will be opened up by the crisis. I think for some time, the travel, tourism, hospitality industries are going to be under significant stress. And I think all the hope for a quick resolution to the COVID crisis are out of the window. But that also stress creates opportunity, right? New hotel chains, because the old ones are going out of business, new restaurants, all that will happen, but it will take time and it will take credit.
I have a question from Manojit Saha, who you might remember from your days in RBI, used to cover RBI for someone else, now covers for us. So he wants your comment or a statement that the RBI governor made. He said that yield curve is a public good. That's a heavy intellectual question.
Look, I don't want to second guess what the governor said. I have a rule. I don't sort of comment on current RBI policy.
I can read full sentence. It says financial market stability and the orderly evolution of the yield curve are public goods, and both market participants and the RBI have a shared responsibility in this regard.
Yeah, I mean, look, I again don't want to second guess. Let me just say that in industrial countries, there has been a movement towards trying and containing the yield curve. What does that mean? That means keeping the long-term interest rates low. Typically, central banks used to focus on the short-term interest rate, and now they've moved towards also targeting the long-term interest rate. I think your ability to do that depends a lot on the credibility of the central bank and its ability to expand its balance sheet significantly. I would say the RBI has done a fair amount in this COVID crisis. The question is, as with all emerging market central banks, how much more can it do, especially in the face of rising inflation? And, is that inflation temporary? Is it permanent? Those are the questions they will be asking.
Yeah. So I have a question again from the political side. What's your view on the Atmanirbhar slogan?
We've had that slogan in many ways. I've been reading about some of our, early struggles.
In my school days, and I'm sure in your early school days as well, you are younger.
Yeah. No, it's, if you recall, it was the partition of Bengal, which prompted the first talks of boycotting foreign goods and Swadeshi. And, there were Indian economists at that time who said all our ills came from the import sector. If Atmanirbhar means that we want import substitution, we want to boycott foreign goods, we're not going to have foreign ACs, as you just said, it's a strategy we tried, it didn't work. Why do we think it will work this time around? And Arvind Subramaniam has written a very nice piece on foreign trade in India and says that perhaps we think we're large enough to not need the rest of the world. That would be mistaken. And, when I, a few years ago, reacted to Make in India by saying, in the short run, we should make for India, I meant we had a market which was large enough to try, but not large enough for our ambition. We can certainly practice within India and make sure we have a strong market for Enfield motorcycles. But then to really benefit, we should be willing to export it to the world. That's when we get the jobs, etc. And for that, you have to be cost competitive. In order to be cost competitive, you should be willing to import when necessary. For example, your muffler may be cheaper made in Korea. Well, your whole motorcycle stands or loses based on whether you can buy some of these cheaper imports also. So banning imports may actually make your motorcycle cost ineffective and lose you even greater markets. This is the lesson we've always learned. In order to export, you have to be open on the imports. You cannot have it both ways. I'm going to export, but I'm also going to restrict imports and completely ban them. That's basic economics. We need to figure that out.
Did the Chinese do that?
No, the Chinese were very open on importing what they needed when they needed. And what they've done, which is very clever, is start by exporting more low-end stuff and importing what was needed. Remember, there was a time when China was the assembly house of the world. Everything was imported, but they put the labor in assembly. Then they figured out, how do I make all the stuff that I'm importing? Not through a conscious, but that guy next door says, I can make it cheaper for you than you're getting it from Korea. And the import substitution is a natural consequence of the fact that you have scale on your exports. The guy can now make 200,000, but he's sitting next door. So the transportation costs are insignificant. That's how they grew. Not by banning the imports, but by moving steadily up the value chain. And, we can do that also. There's no reason why we can't. We don't need to slavishly imitate China, but we certainly have to be careful that we don't go back to the 70s through a strategy of, basically protecting our producers and limiting competition. We know where that led us.
Right. I'll make a political comment that in our politics, there is some oomph in the idea of being like Indira Gandhi. And then you end up doing what Indira Gandhi did.
Well, Indira Gandhi, as I've said in the past, is a very controversial figure, as you know, in India. I mean, certainly, her ability to be victorious in the 71 war and the kind of respect that she got for that within the country was significant. But of course, the emergency was a low point in our history. I think Indira Gandhi started on the process of opening up in the early 80s. And India had started this, again, Arvind Subramaniam and Roderick write about that early opening up. But it took eventually, I think the government under Mr. Narasimha Rao and Manmohan Singh to fully open up in a big way, which took us forward.
I have a question from Shyam Sundar ST. He's one of our guests. And this is my question also, actually. He's asked my question. He says, how do we explain increasing foreign exchange reserves in the middle of this crashing growth?
Well, this is the interesting part, right? That what we are seeing is some of it is growth induced because we are seeing imports crash. Because we're not producing as much, because demand is not so strong, imports are crashing. Oil prices also crashed. That's part of the reason.
Interrupt for a second. Degrowth induced.
Yeah, degrowth. That's what the slowing growth is slowing our imports. Remember, our imports were always much larger than our exports. Right. So if you slowed imports considerably and your exports, because the rest of the world is picking up now, is recovering, our exports are doing reasonably well. So exports doing well, imports doing very badly because domestic demand is weak. That means our trade deficit has become compressed. And in addition to the trade deficit being compressed, you have news of people like Reliance bringing in money from outside as they're selling shares to other people. So we've got FDI picking up, okay? And then there's, because our stock markets are doing well, because elsewhere, people want diversification, we are seeing some portfolio investment in India also. So put those three together, you have a low trade deficit. Our services exports are doing okay. Remittances are still okay. And therefore, we are seeing that the current account deficit, that is how much we essentially rely on the rest of the world for savings, is pretty much zero, maybe positive this year. And then we've got capital inflows. All those are leading to an accretion in reserves. It's not very helpful, though, because when that money comes in, certainly we can be more confident We can be more confident that, we can do some things without worry, including if we have a rating downgrade, at least we have plenty of reserves right now. But the problem is it's also holding up the currency and is making it more difficult to export. So it comes with, it's not entirely an unmitigated blessing, but I would say for India, it's far more preferable to have money flowing in than having serious worries about foreign exchange at this point. But we should make use of this, because if we have a comfortable external position, at least in the short to medium run, we can afford to take more risks on the fiscal side.
How would you do that? Is the government losing the window for that fiscal stimulus?
Well, I would distinguish between relief and stimulus. Relief is protecting the weaker segments of our population, of the households, but also small and medium enterprises. That relief, if you don't provide, creates longer-term damage. What now is labeled scarring in the West, SCARRING. So if you don't do that, if you don't provide relief, there's more scarring. Now, is food support the only thing we need to do, or do we need to provide more cash support? Brazil has done a huge job in offering cash support to poorer households, etc. And as a result, Brazil's degrowth in this year is 5%. India has doubled that, right? Of course, India starts out with stronger growth in the first place. So the extent to which we have fallen is significantly more. So one is relief. I would do relief, but I will also set aside funds for stimulus, because as the economy comes back, we need more jobs. Those jobs are provided by things like construction. So can we put in place plans for expanding construction significantly? And that means both the public sector as well as the private sector. Many construction firms are hampered by high levels of debt, by projects which haven't gotten finished, etc. This is the time to repair all that so that we're ready to go. We must focus on ensuring we are not held back by the huge levels of debt and financial distress when the economy is able to run again. Otherwise, this is going to be a lost decade in terms of growth.
But one big construction stimulus coming up, that is the rebuilding of the central vista in Delhi, in Latvian state. Now,
so long as sometimes, any kind of construction is helpful. This goes back to Keynes' old adage, digging up holes and filling them. But it would be better that this had long-term value, that it was a source of value rather than,
like the Taj Mahal in times of FME. So, Ramya Nair, who covers finance and economy for us, she says you've been critical of Modi government's efforts to reform public sector banks. If you were to be the doctor, you know the diagnosis with public sector banks. What will you do now? And if you said, Prime Minister Modi, don't waste this crisis, fix this big problem, what are the things that you want to put at once?
Well, it's one of those things that doesn't happen overnight, but you have a pretty good playbook that you can follow. One is start reforming the boards of the public sector banks. Give them more professional board members, but also give them a more ability to determine the strategy of the public sector banks, as well as over time appointments to the, who's the CEO. Give them more flexibility also over time in determining pay. In the public sector banks, the top officials are relatively underpaid. Now, you're sort of looking in a limited market, but if you open it up to private sector people and gave them the commitment that they would be protected from orders from the government, then perhaps there may be more interest in those jobs. You attract a stronger talent group. So that is first on the governance. That is what you need to do. In order to do that governance properly, you also need to distance the public sector banks from the Ministry of Finance. The big problem has been, micromanagement by the Ministry of Finance of everything. And once that happens, the bank has very little sort of broader freedom. If you can do both these things, you get a stronger sense of which banks are reasonably governed. And as they are reasonably governed, there is a scope for reducing the stake of the government in those banks, giving them a little more freedom, letting them get more, private sector shareholders. I am not an advocate for privatizing by selling to a large business house. I think that is that could compound the problem. I am saying let us do the wide scale sale so that it's widely held. Maybe a couple of strategic stakeholders that you have in order to improve the quality of management, maybe a fintech company or whatever, but don't sell out in a strategic privatization to a big corporate entity. That would be a mistake. Instead, improve the governance. Let this be a self-governed bank. We have some reasonably good self-governed banks. Over time, this will stand us in good stead. I think this will be a mix of public sector banks and private sector banks in the longer run, especially if the public sector banks aren't under the direct tutelage on a day-to-day basis of the government, would be a good thing. Now, that requires a number of other things to happen. For example, some of what the government wants in terms of activities, you need to pay for. If you pay for it, then everybody will do it. The private sector will do it, the public sector will do it. There'll be some competition between them. So instead of saying, aap ye karenge, you have to do this. This is the adesh from the Department of Financial Services. Just say for every additional account you bring in rural areas, we'll pay you, 5 rupees a month. Those are ways the mandates can be paid for, and there's then no reason for the government to hold on. And I've always said, the way you know that you're successful is when they abolished the Department of Financial Services.
Oh, that's it. I've heard ministers for information and broadcasting saying in public forums, because it's something I've been writing, that so-and-so, that's me, has been writing that my ministry should be abolished. I agree with him. And yet you see Ministry of Information and Broadcasting get stronger and stronger as time passes. So those wishes are not easily answered.
Yeah. No, it's tempting. And obviously the bureaucracy has a vested interest to protect its powers and in fact to expand them. And, to some extent, the uninhibited expansion of bureaucratic power when the political side is unwilling to take action is part of our problem.
These are also jobs for them, often after retirement.
Yeah, for sure. But it's also jobs before retirement, right? The number of secretary posts depends on the number of departments there are. And so why would you give up a department?
You figured out your bureaucracy. So LIC, I think this should be our last question. I know that you have other things to do. LIC, government now says it's going to list LIC. Now, the government, although they've been talking about privatizing a lot of PSU companies, has not really been successful unless it's been sale of one public sector company to another public sector company, which I call the Milo Minder-Bender economics from Catch 22. Take it from one pocket, put it in the other. That apart, the government has not succeeded in selling any substantive PSU assets. In this situation, where do you see the listing of LIC on stock market?
Well, this goes back to how serious is the government. Every budget, there's a privatization number. And by the end of the year, we find nothing has really happened. And then they do this one pocket to another. We have been obfuscating our fiscal situation for a long time. When you look at the true public sector borrowing requirement, even before the COVID crisis, it was 10% of GDP, which is really a huge number for any economy to have. I think this goes back to what we were just talking about. There is no intent to let go of these public sector, whether it's at the political level or the bureaucratic level, I can't tell. But, every time it's, the stock market is too low. Well, in the midst of a crisis, the stock market is back at close to 12,000 on the Nifty. What more do you want at this point, given our resource constraint? If you were serious about privatization, you would have prepared these entities and be willing to let go at any time that the market price was reasonable. The truth is, it seems to me there is an unwillingness. Now, on the bureaucratic side, I can even see, apart from vested interests, look at poor Mr. Arun Shourie. After 20 years after he privatized, there's a court case against him. Why did you do it? And
Udaipur in COVID times, leaving his family in Lavasa in Sahyadri Hills.
I mean, this is, what message does this send? Everything I know about Mr. Shorey right from his Express days is this is a fine, upstanding individual. And his only mistake is getting on the wrong side of certain debates. Does that, should that be the reason that you penalize? What message does it send to other public officials, including ministers? After all, he was the Minister of Privatization then. He took bold decisions, but, it's hard to imagine that there was anything other than the interests of the country behind his decisions. And if that kind of official is held up, why would any bureaucrat put his name out? And this goes back to the entire paralysis of policy decision-making by the bureaucracy. Unless the government reassures them, and by action, not by words, make sure that Mr. Shorey is protected as a signal that, in fact, you're not going to go in that direction. And, obviously it's in the courts, but, we always have ways of working with the courts.
Well, to put out the facts quite accurately, the government actually has taken a view in the court that there is no case and the case should be withdrawn, but it's now has to go through its judicial process. And as you know, in India, process is the punishment. Which decent, honest fellow wants to deal with a criminal case in a court of law? And you're right, because nobody wants to change anything as long as they have the fear of all these dreaded C's, CBI, CBC, CAG, etc., etc., etc. So, LIC, do you see any risks fundamentally with listing LIC? What are the benefits you see?
I don't. I do think that selling parts, bits and pieces of the the public sector without any impinging on the governance, so you still hold 51%, is a no-brainer. You get resources.
Right.
What you have to do is just make sure it's spread over time so that you're not based on any particular market day or market event, but you get resources over time. So I would put it almost on autopilot, so much every so often. Of course, there are people who try and front run that. You can try and work around that with SEBI and so on. But I think the real issue on privatization, which the government has commendably said it wants to do more of, is really on governance reform. There's no point sort of selling and finding that you have a poorly governed public sector enterprise, which becomes a poorly governed private sector enterprise. And 3 years down the line, you find it's a total mess. So what you need to do is start improving the governance now, but also do the privatization, if you're doing it, in a way that enhances governance rather than diminishes it, by getting some pretty significant stakeholders, for example, to take part in it. Now, one example of this was when we tried to privatize UTI. We got people like T. Rowe Price to take a role there. But I think since then, we've become uncomfortable with the role of investors who put some constraints on the government. So we have to re-examine that episode and understand who's at fault there. But more broadly, I think that represents a good example of how we can bring in investors at the same time as we're sort of privatizing to try and improve governance.
I see the ball clock right behind you, and I know that we've gone over time. But my last half question. At the time when you left the bank, could you have anticipated that Yes Bank will go belly up like this? Had you begun to see problems already?
I don't want to talk about the details because obviously they're confidential. Let me say that we had started taking a very close look at Yes Bank because the numbers just didn't add up. Given what we were hearing on the street at that time, that, there was a certain amount of riskiness in the lending, which wasn't reflected in the NPA numbers. So our supervisors were taking a much closer look at what they were reporting and how they were reporting. And if you recall, soon after, they had to start restating the size of the NPAs, et cetera, that they were disclosing based on a much closer scrutiny of the processes they were following.
Did you ever get any calls from North Block, someplace else, to be kind to them?
No, let me say this very, very clearly. surprising as it may seem, through both the UPA and the NDA regime, I never got a call on any specific promoter. Be kind to these guys, give a license to that person, etc., etc. There was a respect perhaps for the RBI and its integrity, which I think extended to all my officers also. Again, I don't want to blanket claim there were no sort of problems in supervision or whatever, but in general, I valued the integrity of the institution and the commitment of its people, and I think people outside do that. And that's actually a statement about India that if your client, people know your client and they take advantage of that. But if you can establish a reputation as an institution or as a person, people find that there's no point and they stay clear. But I think this was more general. There was a respect for the Reserve Bank, which kept the political establishment from trying to influence it.
In fact, that is why RBI is one of India's greatest national assets and needs to be preserved.
I agree. And I think this is a more general point also. Again, we have a lot of strong institutions and we should try and respect them and ensure that they're allowed to do their job, because when they do their job, we can be a first world country. Yes. It is when we undermine them that we become a third world country. And I think we need to understand that because that's the difference between success and failure.
I think that's a brilliant note to conclude this on. But before I let you go, have you talked about Royal Enfield motorcycles a great deal? Have you bought one yet or not?
No. When I was in India at the RBI, I thought I'd buy a motorcycle because they were so cheap. But then my officers told me it wouldn't look good for you to get into an accident. And I have to deal with that. They weren't as worried about the damage to my body and soul, but just the fact that I would be in an accident and it would make headlines. So I had to avoid motorcycles.
You don't have that problem now, so I think you should order one. I shall tell my young friend Siddharth Lal to figure this out.
Well, the reason I mention it is I just saw a very nice piece in Bloomberg, which I follow carefully, on Royal Enfield, and I was actually quite taken by the fact that we have a significant export success. I don't know the Siddharth Lal, I don't know Aisha, but I thought it was a good success story.
Well, if you read Bloomberg, a lot of our business coverage comes from Bloomberg. So I hope you're reading Bloomberg on theprint.in. Nevertheless, thank you very much for finding the time and patience, Raghu, and stay fit and stay healthy and keep running and keep talking sense.
Thank you. Thank you, Shekhar.
The Print Off the Cuff, presented by IIFL Wealth and Asset Management, powered by K. Raheja Corp, corporate partner AU Small Finance Bank, in association with Global Insurance Brokers, airline partner SpiceJet, in association with Jindal Steel and Power.